Hey everyone, it's Paul with the Tuesday Bull Profits video. So I've been doing these videos about sort of general things because I feel like when people watch this channel or investments, they sort of have an illusion that's like based on expectation that have been set by the financial industry. And this is what I'm talking about. Okay, so people who are, say, investing their 401ks, or even people that have a good amount of money, they really have this illusion that like you have to somehow accept mediocrity. And in other words, like, hey, everyone needs to accept what the market is. And just for folks that are new to investing, there are things that are referred to as the market. And the most commonly used reference for the market is this index, which is called the S&P 500. It's got 500 of the largest companies that trade in the United States. It's led at the very top by, of course, Apple, Microsoft, Facebook, Amazon, Google, et cetera, et cetera. And if you go through time, that top 10 changes depending on what is going on in the economy in the world at that moment. And over the last 20 or 30 years, people who are called stock pickers or people who manage money somehow have never really been able to outperform the index. So it then became like the thing to do where people allocated all of their money to the S&P 500 in terms of their stock market investing. And now there was this kind of like this enforced mediocrity where this was offered and it was embedded into all kinds of products and services. So people who are in 401ks, you might have something called a life cycle fund. Well, they own the S&P 500 and the stocks in it. The other way that there is also this mediocrity that's there is where people are pushed to what's called asset allocation plans, where you're forced to invest in bonds, which generate almost no interest, or forced to buy into cash that pays virtually zero interest, and all of these things. And underlying it, and this is really the central thing that I want to bring up in this video, and I doubt it's going to be popular because it definitely comes at me. The central thing underlying all of this, whether it is pushing everybody to buy the index, the S&P 500, going to bonds, cash, is to avoid volatility. In other words, the stock market goes up and down, up and down. There's crashes, there's big moves, there's bear markets. And in other words, all of this is designed to avoid volatility. And there is this enormous fear that grips people when it comes to volatility. In other words, oh my goodness, everyone else is selling, so I should sell, because that is what is happening in a crash. That is what is happening in a correction. Some number of people think that other people, if this news is understood, will sell, so they start selling. That in turn drives other people watching the selling to join them. Then you have all of these things that people use: trailing stop losses, various types of quantitative types of trading. Then people use, of course, options and futures to hedge. So there's this snowball of trading activity that just creates the volatility that people are so desperate to try and avoid. And then that then feeds you back into the machine, at least in my judgment, the Wall Street machine that gets you back into the S&P 500, bonds, cash, asset allocation, et cetera. I'm not suggesting this is a conspiracy that has been deliberately done. It has worked out in this way where the fear of volatility, the desire to avoid volatility now sort of acts as a very convenient sort of conduit to constantly generate very mediocre results on your behalf. Today, I believe that ultimately it serves the purpose of Wall Street and the people that, provide you with life cycle funds or mutual funds or index funds, that you continue to want to avoid volatility, that you continue to fear volatility, and that anything that is an alternative, like, for example, what I do and what our services do, which is that we offer stock picks to you. We offer stock ideas to you. We offer you general guidance in terms of investing in it. And they would like you to believe that that's wrong for you. And because of the fact they'll say, well, listen, if one stock is wrong, it could go down 30%, or you might experience a lot of volatility. And this is all 100% true. And what I would tell you is that the way to escape this sort of prison of mediocrity associated with the S&P 500 asset allocation is to embrace it completely. There is risk in the world. There is no avoiding it, is to embrace it. And you can embrace it in two ways. You can go with what people are using, which means you get single digit returns year after year after year. Or else you can say, hey, there's risk out there. Nonetheless, there are also ways to actually use ideas where you can actually generate significant returns. So for example, Profits Unlimited, which is my flagship service, it's a multi-cap service. In other words, we've got stocks that have a stock market capitalization of as low as something in the low billions, 2-3 billion, all the way up to the hundreds of billions of dollars. We have been able to annualize at nearly 30% per year. So that's almost double the S&P 500, Now, it has definitely been volatile. I mean, you definitely had to sit through crashes. You've had to sit through a lot of corrections and great volatility. Nonetheless, if you're annualizing at 30%, if you're even annualizing at 25%, that difference between the S&P 500 or some asset allocation is so great over time, over 5, 10, 15, or 20 years, that it is going to amount to a lot of money. And so to me, it is well worthwhile to endure through that volatility, embrace it, to get superior returns. Now, for some people, that may be inappropriate. Maybe you are older and you need income. Maybe you're older and you dislike seeing that kind of volatility. And in truth, Profits Unlimited and our services may be inappropriate for you unless you're willing to make it a very small slice of your portfolio where you're willing to see your portfolio go up and down all the time. And also just want to plug my service, Profits Unlimited. You can go to a link, profitsunlimited.com. There will be a link down below if you are interested in it. It goes for the first year is $47, I believe, with the offer that's associated with that particular link. However, you can find for slightly different prices. My publisher, like all publishers, has slightly different offers depending on where you might see it. The other takeaway I would tell you from this video is that it is absolutely impossible, completely 100% impossible, unless you are willing to embrace and endure through volatility. You can look at any major big investor. No one has been able to make all of their money as a result of making perfect decisions on trades day after day after day. There's nobody that's made their money that way. Warren Buffett famously said that his ultimate time frame was forever. And I can tell you that from my experience of working on Wall Street, all the best investors have a multi-year time frame in terms of experiencing success. Our services are often compared to Cathie Wood, and I can tell you that she holds on to stocks for years and years and years. She built her Tesla position over many number of years, and she has outperformed the market no different than ours as a result of embracing volatility, enduring through it, and having a portfolio. So the third thing that I would say is that many people try and marry our ideas to their way of doing things. And then they end up frustrated because they end up buying and then they go through a period like we're going through right now where growth stocks are no longer going up every single day, every single week with just minor interruptions. And then they're frustrated and they want to go in and out of it. So it does mean that you would need to change the way you operate in terms of at least the selections that you use in our services like Profits Unlimited or other services. And the number one thing is what I mentioned. You have to lengthen your time horizon to a minimum of 1 to 3 years. We've definitely seen big gains show up in that time frame. For example, in our small cap service, which is called Extreme Fortunes, we had a stock, Plug Power, that went up 1,100% from the time we put it into our model portfolio to when we sent out the sell trade, 1,100% in 3.5 years. Now, those kinds of gains are possible. Definitely, you're not going to get them every single day, every single year. And in that same service, we've also got multiple stocks that are still open that have gains of 600 and 800%. And having that longer time horizon allows you to actually get the benefit of these big gains. And we have big gains as well in Profits Unlimited, which also has the same time frame where Tesla is up over 1,000%. Our very first stock, which is nearly 5 years ago, ST Microelectronics, is up hundreds of percent. And we've got other stocks in there that we have held on for long periods of time with large gains. And the second thing that you would need to do to experience success, to avoid mediocrity, is you have to have a portfolio. You've got to have, I say minimum, but that's really 5 stocks. However, I would say 10 stocks is better because you want many ways to win. You also want enough stocks that allow you to sort of dampen the volatility associated with any single stock. So a portfolio gives you that. So I know that this is a video that's like sort of trying to continue in a series of videos just to point out who we are, what we do, who are we right for. Should you waste your time watching this channel? Should you consider subscribing to our services? Because what I find is that the vast majority of people are looking for day trading advice. They're looking for very short-term trading advice. And there are people that do that very, very well. And the people that offer trades daily, they're looking for small gains. They're looking for them to come quickly. And we do not offer that. What we do is focus on big, massive mega trends, look to identify them early, look to find the leading companies in them, and position ourselves ahead of the big money coming in to bid them up. Because today, big money is trillions of dollars. And so if you're buying a company when it's worth even 5, 10, or even 20 billion, even 50 billion, it's a long way to get to where Apple is today of $2 trillion. So there's a lot of upside, and our goal is try and position ourselves before the big money comes to bid the stocks up. And that way, when they come in and bid the stocks up, those represent gains to you in your portfolio. And that is what we are seeking. So hopefully you are able to learn a little bit about what I do, what we do, what our services do. That way, when you subscribe to our products, or even if you're just watching our YouTube channel and you're never getting what you're looking for, which is some people asking me to comment on single stocks. Generally speaking, beyond our 2 portfolios that are out there on YouTube, Buzz is one of them, and you can go back and check, or it might be a link up there for Buzz for that video. Those are the stocks that we will comment on individually. However, single stocks we leave for our subscribers. And if you want access to that, we do ask you to subscribe. And if you don't want to, that's totally fine. However, if you would like access to our services and want to see the full array of our ideas across Profits Unlimited, Extreme Fortunes, as I mentioned above, then you would need to subscribe. However, general guidance and things like that, we will continue to do between all the things that are on our YouTube channel, Amber on Market Talk, me on Tuesdays, and then the Ian Cast with my amazing colleague Ian Dyer and I on Fridays. So hope you enjoyed this video. If you did like it, please subscribe to our channel, give us a thumbs up, and comment about anything that you have found interesting in this video that I can follow up on in the future. We'll have another video for you next week. Until then, this is Paul saying bye.